What's up traders? In this video, I'll be performing a market forecast on GBP USD. So stay tuned. Now this video is going to serve as my outlook for GBP USD for the month of December 2025. I'll be focusing on the weekly, daily, and 4-hour time frames in order to give you guys a medium to long-term view of what I am anticipating to happen next on this pair. The reason I am making this video is to show you guys practically how I go about establishing a directional bias and how I identify potential areas to trade from based on that directional bias. Now, if you've been a long-term viewer of my channel, you may be asking yourself why this isn't a market forecast for Euro USD, which is the main pair I like to follow for these market forecast videos. And the reason for that is I personally believe that the analysis I shared at the start of November for Euro USD is still relevant for the month of December. The only thing that has really changed here on Euro USD is the formation of this relative equal low liquidity pool just above this daily demand zone that sits at the extreme of the most recent bullish daily internal range. So this means that the analysis which I shared in last month's video still remains true, because for the most part, nothing has changed in terms of the main areas of interest that we're looking to trade from based on either continuations or reversals to the downside. In terms of the 4-hour time frame, we have seen price action break and close above this initial 4-hour supply that I had identified, but we can still see that this 4-hour supply here remains relevant and is still a short to medium term buy target. So I do urge you, if you haven't seen the market forecast video for Euro USD for the month of November, do check it out, because that analysis is still relevant for the month of December. Now, going back to GBP USD, which is the focus of this month's market forecast, we're going to start off here on the weekly time frame as we always do, and we can see that here on GBP USD, price action is trading within this large established bearish weekly range. We currently have the weekly pullback phase taking place, which is being facilitated by this bullish internal structure. And at this current moment in time, price action is trading within this most recent bullish internal range. Now, from a weekly point of view, the overall objective is obviously a violation of this weekly week low. But in order for that to occur, we will first need to see this internal structure shift from bullish to bearish in order to signal the end of the weekly pullback phase and the potential start of the continuation phase. The current objective of internal price action is a violation of this internal week high, and this is where we can now identify the two main areas of interest for us here on the weekly time frame. The first main area of interest is going to be this weekly supply zone that sits at the extreme of our bearish weekly external range. If we see a new bullish internal break of structure here to facilitate a resumption of the weekly pullback phase, this will be our next main buy target for that weekly pullback. We can see that we have a nice pool of trendline liquidity that sits below the POI, and we also have imbalance that sits below the POI as well. This makes it a nice potential sell target where we could see that bearish weekly continuation phase originate from should a mitigation occur. Obviously, in order for price action to get there, we first need to see the violation of this internal week high. If, however, price action continues trading lower from where it is now, and we see a violation of our internal strong low, that will obviously signal the potential start of our continuation phase. And then that next area of interest for us would be this weekly demand zone here. By the time we see a mitigation of this weekly demand, the anticipation would be for a potential short-term bullish reaction before a resumption of the underlying bearishness. And this is because of the fact that at this point in time, this weekly demand zone is regarded as a previously unmitigated POI. Now, I do want to stress that as much as this video serves as my market forecast for the month of December 2025, this particular weekly analysis will still be relevant going into the new year for the month of January 2026, for the month of February 2026, and potentially even for the month of March. So the reason I like to include the weekly time frame in my market forecast videos is because it gives us a very long-term view of where price action is likely to go next. So from a weekly time frame point of view, as much as we are trading within this bearish external range, the directional bias which we can obtain from this time frame is bullish, as we are anticipating a potential resumption of this internal bearishness to potentially target that internal week high. From the weekly time frame, we can now drop down to our daily time frame, which I obviously regard as the internal of my weekly, and we can now see that most recent weekly internal range a lot clearer, which is represented as a bullish daily external range here on the daily time frame. We can see that we had our internal structure trading bullish as it facilitated this impulsive phase that generated the break. And at this current moment in time, our internal structure is pointing bearish as it facilitates the daily pullback phase. So overall, daily time frame, we are bullish. The overall objective of this time frame is a violation of the daily week high. The question we want to be asking ourselves is, how is price action likely to go about violating this daily week high? Because of the fact that we are trading within a bullish external range, we want to identify well-priced demand zones where that bullish daily continuation phase could potentially originate from. And the first well-priced daily demand zone is going to be this daily demand here. This is going to be our initial sell target for the daily pullback phase that is currently taking place. And this is going to be the initial POI where we could potentially see that bullish continuation originate from. The next main area of interest where we could potentially see the continuation phase originate from, should this area only give us an initial bullish reaction before bearishness resumes, is going to be this daily demand here. The reason I am not looking for continuations from this POI is because of the fact that it sits at this relative equal low liquidity pool. And that means that this daily demand here could potentially be used as a form of inducement for this daily demand here. So in terms of potential areas where we could see that continuation phase, this daily demand here would be the first, this daily demand here would be the second, with this daily demand here acting as potential inducement. Now, obviously here on the daily time frame, we do have the option and we do have the opportunity to trade these daily POIs directly using a buy limit order by placing our buy limit order either at the open or at the midpoint of the POI. That will obviously mean that we're looking to take a much longer term swing trading approach to trading this particular time frame. But the alternative to trading these areas directly here on the daily time frame would be waiting for our bearish internal structure to come in and mitigate these POIs before seeing a shift from bearishness to bullishness, and then looking to get involved after that shift takes place. Now, in the same way that we've asked ourselves, how is price action likely to go about violating this daily week high? We can also ask ourselves, how is price action likely to get down to this area here initially? And this is where we can start focusing in on the bearish internal range that is currently forming. We can see that at this moment in time, I do have an established daily internal strong high, but I do not have an established daily internal weak low just yet. And you will have a much clearer understanding of why this is the case when we drop down to the 4-hour time frame. But essentially, in terms of how price action is likely to get down to this initial daily demand zone, what we can anticipate is a potential bearish internal continuation phase down towards that area. So from the daily time frame, we can adopt a short to medium term directional bias, which is bearish, down towards potentially this initial daily demand zone. And that will entail us looking to trade this bearish internal range, down towards that POI. And when it comes to looking for potential selling opportunities based off of this bearish internal range, we have two daily supply zones that are relevant within that internal range. Now, to have a closer look at these two daily supply zones, we are now going to drop down to the 4-hour time frame, which I regard as the internal of my daily time frame, and we can now see that bearish daily internal range a lot clearer, represented as this unconfirmed bearish 4-hour external range, with this being my most recent bearish 4-hour break of structure. We can see here our 4-hour internal structure pointing bearish, as it is facilitating the impulsive phase that generated this break. And at the time of recording this video, price action is currently trading within the most recent bearish internal range. And if we come in a little bit closer, the reason why I have not established a new 4-hour week low just yet is because of the fact that my internal structure has not shifted bullish yet to signal the end of the impulsive phase and the potential start of the pullback phase. And so by looking for potential selling opportunities within this bearish internal range, essentially what I'll be looking to do is trade a potential continuation of this 4-hour impulsive phase that generated my 4-hour external break. Now here on the 4-hour time frame, we can see those two daily supply zones a lot clearer. Both of these POIs were formed within the impulsive phase that generated our external break. But the key difference between the two is that this first daily supply zone sits within the current bearish internal range, but the second daily supply zone sits outside of the internal range and sits at the extreme of the unconfirmed bearish 4-hour external range. So going into the month of December 2025, with the understanding that our internal structure here on the 4-hour time frame is bearish, we can look for potential sell opportunities from this daily supply zone to trade a potential resumption of the current 4-hour impulsive phase. This will allow us to target this 4-hour internal week low, which is the current objective of this established 4-hour internal range. Now we have the option to trade this area directly here on the 4-hour time frame by placing a sell limit order either directly at the open of daily supply or at the open of the refined 4-hour supply and target the internal week low. Or instead of trading this area directly, we can instead wait for the bullish structure that is currently facilitating this internal pullback phase to mitigate our POI. We can wait for that structure to shift bearish. And then after that structure shifts bearish, we can look to get involved in a potential move after that structure has shifted bearish, because that structure shifting bearish would signal the end of the pullback phase and the potential start of the internal continuation phase. If, however, this daily supply zone only manages to produce a short-term bearish reaction, and we instead see a resumption of bullishness to violate this internal strong high, that would, number one, help us establish a new bearish external structural range, and that would then bring this daily supply at the extreme into focus, because now this daily supply zone would become our next main buy target for the confirmed 4-hour pullback phase. So notice here how our analysis on the 4-hour time frame is offering us a potential sell opportunity to trade in line with the current bearish directional bias here on the 4-hour time frame. And that potential selling opportunity is what could potentially allow price action to trade down towards this first well-priced daily demand zone within this already established bullish daily external range, from which we could potentially see our daily continuation phase. So just a very quick recap for you guys here. My daily time frame is bullish, and the overall objective is a violation of this daily week high. How is price action likely to go about violating that week high? Ideally, we would like to see our continuation phase originate from either this daily demand zone or this daily demand zone, as these two POIs are well priced within our current external range. However, where price action trades now relative to these two POIs, we have quite a bit of real estate to cover, and that real estate will need to be covered by bearish price action. And this is how I am now able to obtain a short to medium term directional bias, which is bearish, down towards this initial daily demand zone. How am I going to look to act on that directional bias? By dropping down to the 4-hour time frame, by understanding that I'm trading within a 4-hour impulsive phase that is bearish, and by identifying potential selling opportunities that will allow me to trade that bearish directional bias. Now, in the same way, here on the 4-hour time frame, where price action trades now relative to the position of this daily supply zone, we also have real estate that needs to be covered. And this real estate will need to be covered by bullish price action. And so going into that very first week of December, we can be on the lookout for potential buying opportunities up towards this daily supply before potential bearish trades downwards. Now, that does not mean that you will 100% get valid buying opportunities up towards this daily supply. It does not mean that you will 100% get valid selling opportunities from this daily supply zone, but this is the process of, number one, identifying what direction to trade in, and then identifying potential areas to trade from, which is two of the most important aspects of every trading plan and of every trading approach. Now, I have been asked previously to include my 15-minute time frame analysis in these market forecast videos, but the reason I don't like doing that is because I could spend 5 or 10 minutes breaking down my 15-minute time frame analysis as it relates to my 4-hour time frame, only for that particular portion of analysis to be relevant for a day or two. And I would like these particular videos to have a bit more longevity and to be relevant for a longer period of time. And so if you're someone that only manages to catch this video 3 or 4 days after it has been uploaded, that particular section of the video that covers the 15-minute time frame will be irrelevant to you. But I do want to assure you that I do absolutely nothing different on the 15-minute time frame than what I have just broken down here on the 4-hour, daily, and weekly. I utilize exactly the same thought process. I utilize exactly the same approach to identifying those potential areas to trade from based on an established directional bias. However, if you do want to receive daily pre-market analysis that includes the 15-minute time frame for GBP USD, USD JPY, gold, or NASDAQ, feel free to hit the mentorship link in the description below and join the CTFX Lite membership tier on my Patreon. That will give you limited access to my Discord channel and my daily pre-market analysis for those 4 markets. So I'm very interested to see how the rest of the year is going to pan out here on GBP USD in terms of price delivery and in terms of the technicals. Definitely feel free to add this pair to your watch list, as I do believe there are going to be some decent opportunities between now and the end of the year. If you found this video helpful, informative, or entertaining in any way, shape, or form, please give it a like, subscribe to the channel so you don't miss out on any future content. And as always, I appreciate you guys so much for watching. Speak to you in the next one.